Okay, so you had a 5-minute intro and you got a little background on what lazy days are, and by taking a look at the settings that I have in the left hand corner of my chart, you know what these lazy days lines are. So again, it's as simple as setting up all these exponential moving averages. Now, as you were setting these up, no doubt at some point, somewhere probably between the 610 to 987 to 1597 exponential moving average, you probably said to yourself, gosh, there are sure a lot of these things, and why so many of these moving averages? Isn't this going to clutter up my chart? Is this going to be too much information? Think of it this way, and this is often what does happen. When you look at a lazy days line, number one, if you noticed, I have them pretty fine in terms of thickness. Don't get carried away. Don't make them very prominent on your chart. They are no more or less important and should not be any more prominent than any other trend line, support resistance lines, psychological levels, or even Fibonacci. Okay, so if you'll notice, the only things that are ever thick on my charts are major uptrend lines, downtrend lines, and here we have the 200 period simple moving average. Now, I suppose officially it's not a lazy days line because it's not an exponential Fibonacci based moving average, but there is no single moving average more psychologically significant across more markets and time frames than a 200 period simple. And for that reason, and that reason alone, it should find a home on your charts, most especially any daily chart. Again, stocks, futures, forex, doesn't matter. So you've got all your lazy days lines on a chart. Realize that you're going to need at least 1,597 candles, whether those be daily candles, whether those be 30-minute candles. You're going to need that many to plot all the lines. Now, whether it be on a daily chart or whether it be on a 30-minute chart, we're just looking at the Euro US dollar. I could do this just as easily on the Dow or the gold market or the dollar index or crude oil or Microsoft, doesn't matter. Just realize that on the way down, every one of these exponential based moving averages was already plotted, much as if you had done a Fibonacci and those lines and levels are already there and waiting. Okay, realize that they're already there. I won't call it forecasting. I won't call it leading. I don't think there's such a thing as a leading indicator. What these are just projected potential decision levels. No more, no less. Keep it simple. Okay, what's really nice about these though is they're automatic. There's nothing really you have to do to generate them on your chart other than have the moving average set up on the chart to begin with. Okay, now you can see here, because the trend has been so persistent and so dramatic on the daily chart of the Euro US dollar, the fiber as we call it, that we are south of our largest lazy day line, which is the 1597 here. So I'm not saying that if you have lazy days lines, you don't have to draw trend lines. That's not the case at all. What it will do, though, is take a lot of that burden, that heavy lifting away from you. So in this case, we're pretty set when it comes to resistance levels. What about the 30-minute chart? What if I went into a chart where we're not in a situation where all the lazy days lines are stacked either north or south of current prices? Well, in this situation, you see I've got some below. I've got the 89, the 55. This is the 200 period simple. Here's your 233, and we're approaching, and we were rejected from the 377. Now this high right here, let's blow this up a little bit. This high right here was a high of 28.44. You can see the lazy days line is sitting at 28.49. Now, do I need the lazy days line to remind me that there will be resistance at 28.49, or what is right there, 28.50? Well, if you've been listening to me talk for any amount of time, you know I talk about psychological levels. That's one of the keys to what I do. Okay, psychological levels are very important because this is the way traders think. This is the way the human mind works. Whole, round, even numbers, right? So 28.50, one of the major psych numbers. So I don't need the lazy days line sitting at 28.49 to remind me of this, but it sure is great double confirmation. What is this level? It's resistance, nothing more, nothing less. Just as if I would have had a horizontal resistance level here, just as if I might have had a downtrend line coming across here, that's what this lazy days line does. So as I break up through 2700, and you can see here at the time, right there, the 233 was right in there. Okay, Just as I come back up, I know this is going to be a decision level. This is going to be a level I'm going to have to watch. That's what the Lazy Days lines do for you. Again, objectively. All right, so I'll see you in the next video.